What's going on? TK coming at you. Master Wealth Builders is the company. And have you seen all of the different videos that are educational? It used to be videos where you're laughing, dancing, popping, and doing synchronized moves. Now you're starting to see a lot of educational videos out here that is really meant to enhance your life if you listen to what the person is saying. There's a lot of celebrities that have been making videos and commenting on different things. I don't know if you've seen Master P and Waka Flocka talk about how a large insurance policy would benefit you financially if you was to put money in that direction. And a lot of people just overlook it. Like, I don't have that kind of money to put into a policy. I don't have the ability to open a large policy. But, I've done a lot of videos where I've tried to show the everyday person that you can still build the same thing because of a MEC limit associated with each contract. There's an IRS limit that you're allowed to add to your policy that goes above and beyond your bill. So if you think about your bill every single month, this is an additional amount that you can add that goes above your bill. But if you do the MEC limit every single year, you can still, without starting a large policy, grow to a substantial large amount that financially could benefit you later on in life. Because this account grows, it's a savings account. It grows 6 to 8% and it's tax free. And you have a contract that says whatever money you put into this contract, you'll never lose a penny. Yes, that's written into the contract. Zero loss, 6 to 8% gains, and it's tax free. So those are three main reasons why anyone with a substantial amount of money should open a large policy. It's just that simple. And if you can't afford to open a large policy, then what you have to do is contribute the MEC limit every single year. Modified Endowment Contract, MEC, the IRS limit, where as long as you don't go over that amount, you can contribute additional monies above your bill into your contract so that it grows, it compounds faster and builds to the point where later on in life, it benefits you and you can take a loan against that policy. When the Great Depression happened, banks were insolvent, completely closed, but people were still able to borrow against their life insurance policies because you're not in the stock market when you put money into a policy. It's never put on the market. It's considered off market. That's why you have a guarantee of principal protection. You never lose a dime of money that you put into these contracts because it's never put into the stock market. What happens, as I explained in many other videos, is that you just have participation points. You're credited based on how well the stock market does up to a certain point. So you get to ride the up and not worry about the downside risks. Completely safe. It makes financial sense. It's no reason why you shouldn't do it. Again, the celebrities that have influence that I mentioned have said it in multiple videos. If they knew this sooner, because they have the money, they would drop, X amount of dollars into a policy because it grows tax free. You could take a loan out against it. And guess what? You don't lose any of your principal. Those are great reasons to get started. Click the link in my bio. Let's do an illustration. Let's see how your money can grow. It's just that simple. I was working with a client the other day, decided to put $1,500 a month. Why would you put $1,500 a month into an insurance policy? Well, he wants the tax-free growth. He wants the guarantee of no loss. And he likes the ability to take a loan out against that cash as it builds throughout his entire lifetime. So instead of going to the bank of ABC, you go to the bank of your insurance contract and you just say, hey, like to take a loan out. That loan is up to anywhere between 5 to 6%, and you pay yourself back. So it can be as much as 5 to 6% from your insurance contract. You take a loan out, you pay yourself back, the money goes back into your policy, and it continues to grow. It's a win-win situation for people smart enough to take advantage of this and actually park money into a contract. Yes, you get a contract that you have to sign. You get a written agreement that says no principal loss. You get a written agreement that says tax-free growth. It is a wonderful situation that allows you to better position yourself in life in the long term because of the stock market can't do this for you. The stock market always tells you that there's a potential for loss. Don't do that. Come out of 401k, come into $1,000 a month into a life insurance policy, and guess what? An IUL will perform better. A deferred index annuity will perform better. And for people who really want to win, Kaizen will outperform everything else on the market. Hybrid product that gives you a loan, $3 to every $1 you put into the IUL, and then it multiplies. The bank's money and your money multiplies together, and then at the end of that, you get to keep all of the gains. Isn't that a smart idea? Doesn't that make financial sense? Why would you say, I'm not interested? It doesn't make sense. If you start when your child is little and you say, I'm going to put $100 or $1,000 a month into a policy for my child, that child is financially free by the time they grow up. Why would you not do that for your child? Why are you constantly saying no to something that could financially position that child better once they grow up? So, $100 a month, boom, tax-free growth, guaranteed no principal loss. That child grows up, can take a loan against that policy at any time. Whatever they need, they can just go to their policy and say, I want to take a loan out. And you did that when the child was born. So it had 20 years of growth, of compounding, of interest that they could take a loan out against. And loan is not considered income, so it's tax-free. It makes sense. You got to get started. You got to do this for your family. You have to start putting money into an IUL, a deferred index annuity, or set up Kaizen. Again, a bank is going to loan you money, $3 to every $1, up to $3 to every $1 that you put into the IUL, and boom, it grows. That is a smart thing to do. I am trying to encourage you to utilize these products. This is what happens when you become a licensed professional within the insurance game. You get exposed to various financial mediums that help people grow money. And then you have to somehow go out here on social media and explain these mediums to other people so that they understand how the product allows their money to get a job, how they're able to win long-term growth with the different strategies and different products that the companies have made available. So they create deferred index annuities. They create Kaizen. They create IULs so that people can benefit. Every time you hear the term infinity banking, you win more if you use an IUL instead of using whole life. The same concept, use it with an IUL, don't use it with with whole life, and you perform better. The performance on a whole life policy is only 4%. The performance on an IUL using infinity banking is 6 to 8%. Which one makes more sense? You have to do this for yourself. It makes a lot of sacrifice today so that your older self says thank you. Like, hey, ooh, how did you get here? How did you win? Well, I opened a policy. I contribute the MEC limit every single year. Even though the policy was low, it grew fast. And guess what happened? Now that I'm older, I can benefit from me making that sacrifice. Let's get started. Click the link in my bio, set up a consultation, and I will do a custom illustration for you to show you how your money can multiply, how your money can get a job. And guess what happens? We all win together because teamwork makes the dream works.